The latest data from the Toronto Regional Real Estate Board finds sales were 2.4% lower in June than the year before, but 8.1% higher than the month prior. That increase was propelled by falling home prices and a growing number of listings.
You want to know how strange this market is? June 2025 had over 19,800 new listings. That's up 7.1% from last year. But the benchmark price, it just slipped under the $1 million mark for the first time in 4 years. We're sitting at $995,100. And yet sales dropped again, down 2.4% year over year. Only 6,243 homes sold across the Greater Toronto Area. That makes it one of the worst Junes for sales in over 20 years. Hey, I'm Linda Ragona from the Ragona Sisters, and around here, we keep it real. Make sure to like, share, and subscribe because what I'm about to break down is important. Here's the part that gets weird. Now, let's look at the month over month. Sales actually ticked up slightly from May. A little bump, but for the first time in the year, this is not momentum. This is just a smidge of a flicker. Now, let's talk prices. Between May and June, prices dipped just 0.3%. It's basically flat. Economists call this price stickiness, where the demand and supply theory is completely out the window. Even with more homes on the market and fewer buyers, prices just aren't moving much. Why, you ask? Because sellers aren't panicking. Most would rather sit and wait rather than cut their price. Some buyers or sellers are in the illusion that this blip will disappear.
Soggy sales, it's a buyer's market. We're not seeing the bidding wars that we saw in the past. We're seeing sales being soggy and also new listings piling up for people wanting to sell their homes are unable to sell their homes in this environment.
So what we're seeing isn't a crash, it's more like a stalemate. Buyers are watching like a hawk, studying the market. They're thinking, if sellers won't move, should I just wait? This is always the biggest question we get. I had a client pre-approved, excited, ready to write an offer on a townhouse in the Greater Toronto Area. She saw it twice. She even brought her mom. She loved it. Then I got the famous text message. We've decided to wait, just not the right time to make a move. Yeah, that hesitation everywhere right now.
Problem is, there are few buyers to be found. From investors to homeowners, demand is disappearing. For years, investors have been some of the biggest buyers of pre-construction condos, knowing there was a steady stream of renters in the pipeline. Not anymore.
Federal policymakers have put a cap on immigration. Population growth is falling off very quickly. You have a historically high number of purpose-built rental units.
We started the year with real optimism. You know, borrowing costs were down, confidence was building, things were looking up. Then Trump got elected again, and the second he made the tariff feud public.
And there's been one other wild card that's put a chill on housing.
Reciprocal tariffs.
25% tariffs.
It's a beautiful word.
Amid the trade war with the U.S., unemployment in Canada is on the rise, and consumer confidence is shaky, forcing many buyers to put major purchases on hold.
A small interest rate reduction in June could make things improve a little bit for a period of time, but then, something else could change that sentiment. We're just in this time of uncertainty right now where we just got to ride it out.
Threatening duties on Canadian aluminum, steel, energy, everything changed fast. Markets dipped, confidence fell off a cliff. And what was supposed to be a bounce back in the spring, like all the economists said, it turned into a yo-yo. A few good weeks in May, that's all we got. And then we got more hesitation. The public tariff feud is still going on publicly, like drama from a bad breakup going viral. Coming up, I'll show you why the flood of new listings might not be what you think. But first, let's talk about what I'm seeing on the ground, because that's important. Showings are happening, buyers are very curious, but offers, not so much.
It does surprise me. I thought we were, gonna have an offer by now, but it is just the way the market is.
This real estate agent says she's been seeing this trend since the beginning of the year.
Some listings are dropping 100,000. Some are like higher priced properties are dropping by 200,000. Some listings I'm seeing them sitting on the market for like 3, 4, or 5 months or longer, and some of them are not getting any showings.
They're hesitating. Instability causes people to put off major decisions. I've had showing cancellations more in the month of June than in the 3 months combined. And it's not about homes, it's about the market and where the market's going. People are scared to make the wrong move. And that's why this next stat matters so much. Those 19,800 new listings in June, 1 in 3 of those are likely not new. They're relists. Homes that tried the market, didn't sell on offer day, and they came back under a new MLS number. And the MLS system doesn't separate those out. They're just considered new inventory. So it looks like there's a ton of inventory, but a good chunk of that is recycled. Buyers are catching on. They're asking, has this one been on the market before? And why didn't it sell the first time? Then they take out their calculator and figure out the total number of days from start to finish. And when they feel like something's been sitting, they negotiate even harder. But motivation is truly the key. So if you're listing, don't assume new means fresh. Next, I'll show you why homes are still selling above asking and what they all have in common. But first, let's talk the big picture, the tale of the 2 GTAs. City of Toronto 416 average price is $1,155,000. Rest of the GTA, the 905, it's over $1,100,000. The 905 is closing in that suburban value gap. It's shrinking faster than your jeans after a long winter. And home types, apartments are really having a not hot girl summer.
In Canada's housing market, condos are the weakest link. The steepest drop in sales and prices have been in Toronto. The trends in Vancouver are troubling too. Here's why.
We've got 7 months of inventory, which is insane. And we just don't have the buyers to absorb it. We haven't seen that much inventory in 20 years.
With so many properties to choose from, buyers are looking for deals, and sellers can no longer demand the hefty prices of a few years ago. Economists forecast in some markets, condo prices will fall another 10% this year. That would erase most of the gains seen during the pandemic. A stark reminder that rising prices in real estate aren't always guaranteed.
The home price index for condos is down 7% from last year, and prices in 905 are sitting in the mid 600,000s. Just on a disclaimer, some condos are seeing a bigger drop. It's a buyer's dream. Let's talk about polarization, because this market is completely split. You've got stale listings, overpriced, outdated, or poorly presented, or just in a not so high demand area. They are just sitting. Then you've got clean, well-prepped homes that are priced right in high demand areas with not so much competition. Those are moving. We just listed a semi in the GTA, staged it, priced it really well. 3 serious buyers, 1 strong offer, sold above asking, quietly, no drama. So the idea that nothing is selling, it's not true. The Toronto core is still selling fairly well. What's not selling are the ones that aren't ready or have high competition, especially those cookie cutter homes that have 10 of the same features and size on the same block. Buyers are too informed. They're skeptical. They're sensitive to anything that feels overpriced and risky. And if you're buying, this opportunity is in full swing, only if you're strategic. Let's land this with a few big takeaways. This was supposed to be the market's comeback moment. It wasn't. It was the worst June in like 20 years in sales. Prices are stuck, and that tells us sellers still have holding power, but not everybody. The benchmark slipping under 1 million, that's more psychological than financial, but it's shifting how people think. 1 in 3 new listings likely isn't actually new. That changes everything from negotiation strategy to buyer confidence. So what should you do? If you're buying, this is your moment to shop smart, low pressure, high potential. You need to fact find the particulars to find out those deals. If you're selling, you need a real plan, pricing, timing, presentation. Everything matters more now than ever. Really study your competition. That's a big one. I've seen deals close for $80,000 less, $100,000 less, even $150,000 below asking, because smart buyers know where to look and they have the right professional. We had a buyer who got $106,000 just the other week off an asking price because the seller was over leveraged and couldn't afford to keep the property along with 2 other properties he owned. He took the buyer's offer because the closing was in 30 days and it was a cash offer. We had no financing. We solved the problem the seller had and took the liability off his back. The buyer found an opportunity and he scooped it up. This market is complicated, it's mismatched, but if you play it right, you can get an amazing deal. Reach out if you're thinking of buying or selling in the Greater Toronto area. We've got your back. And if this helped clear things up, share it, because a little clarity goes a long way right now. In the next video, I'll show you 3 pricing traps to avoid in a sticky market and how to spot the deal hiding behind a relist. Thank you so much if you watch it right to the end, and I'll see you in the next one.